So wait, so say you're rated 600 whatever dollars because you had income. That's your premium for the rest of your life?
It's
Unless you challenge it.
until the income goes down, because the premium is going to be based from your tax return from 2 years.
But you have to
So
challenge it. They don't do it automatically.
I agree.
Don't they continue to look at it?
They do.
If your compensation goes up, yeah.
Or down.
Or down. But if it goes up, it
Yeah.
can go up.
That's right.
Of course it
Wait,
goes
so is it automatic or you have to submit paperwork to have it?
They say it's automatic, but
Because let's take a look at the dynamic here. Who's going to be the guy that's paying $630 a month? It's going to be the owner of the company,
right.
right? The high income wage earner, all right? And who's going to be paying $185? Probably the workers. All right, so if you're an employer, you're paying for everybody. Right? So then you take a look at it, because let's keep some numbers in mind. We have, say, let's do the employees first. So you have $185, hypothetically, $200. The cost of healthcare, depending upon where you want to go. So let's assume even if it's a bronze plan. So we have a bronze plan that has a single premium under a small group. It says Anthem. It says Anthem Blue Cross Blue Shield, Bronze Blue Access on top. That's what we're going to look at. So this bronze plan with Anthem Blue Cross Blue Shield, this is a small group rate. This is an actual right-over rate charts. Okay, so any small group that goes with this particular plan has a good network, but this plan has a $5,250 deductible if you're single. After the deductible, it's a 50-50 split. The insurance carrier pays 50%, the member pays 50%, until there's a total out-of-pocket of $8,000. After $8,000, everything's covered 100%. That's what this plan is. Okay, the cost to the insurance company for this plan, the single premium is $10.59. Hypothetically, let's take a look at this as opposed to Medicare. Medicare. So under Medicare, we know Part A hospital is free. Part B has to be paid for. So let's assume it's a lower wage earner. Low wage earner, of course, is going to be about $185. Then to Sherry's point, the employee has one of two choices. They can get a Medicare supplement plan, where they can go to any Medicare doctor they want to go to, and then they have to buy a prescription plan, right? Something like that. A good plan is going to be roughly $326 for Plan G. Basically what that says, you pay a $250 deductible. After that, everything's covered 100%. So you're paying a $250 deductible versus a $5,000 deductible here. All right, the cost of that plan is going to be roughly $326. So you have $326
A year.
a month.
A month.
$326 plus $180 so far, and then you have to get a drug plan. So you got $180 plus $326, and then you have to get an RX plan. All right, and that's going to be roughly about $115. So at the end of the day, that's 10, 11, 12. That's $620 all in. Okay, going with the Medicare supplement, comprehensive coverage. Now, for those lower income employees, they could also go into what's known as Medicare Part C, which is managed care. Okay, so what the difference is, rather than, we'll call it the government managing the healthcare, you can go to any Medicare doctor you want to go to and you have freedom to go wherever you want to go. The government says to the insurance companies, United Healthcare, and we're going to give you a chunk of money, okay, and you manage the care for the employees. And then what will happen, the premium for those plans are going to be next to nothing. It could be zero, it could be free. You know, at the end of the year, you see all of this commercial, Joe Namath's on there, we're going to give you, money if you enroll in these plans.
Let's see, like United Healthcare benefit and the Humana.
But you're
Yeah,
limited on
yeah.
doctor
Is that what this
choice.
is?
You can't go to your own doctors or the ones you want.
That's right.
Listen, and if I'm sick and I got cancer, I want to make sure that I
You
can
wanna
go
where you
wherever I
wanna
want to go.
Absolutely.
I don't want somebody telling me.
That's the whole thing.
Right.
She's
Because
right.
they
She's
manage
100%
end of
right.
life care. And
Right.
they say, nothing we can do.
Not only that, she's 100% right. Not only that, under the managed care plans with the insurance companies managing the care,
Yeah.
who's holding the money? You think they want to give it up?
No, of course not.
So what do you think is going to happen? Somebody's going to try to get some type of procedure. What do you see?
Deny.
Deny. Right? Then what happens? Now most people go, oh, this is the worst insurance company. And maybe part of it's true, but not all of it. But then all of a sudden what you have to do, and we see this on the commercial and small group side also, not to the extent of the Medicare Advantage, but the doctors have to provide to the insurance company the medical necessity of to why the procedure has to be done. And why some lower cost alternative treatments may not. You see that more so with the Medicare Part Cs And you see that a lot with the drugs, especially drugs, on virtually any plan. They're saying, the insurance company is saying to the doctor, why are you prescribing this expensive drug when there are 3 or 4 other drugs that are less costly? Why aren't you prescribing those? And the doctor has to come back for the benefit of the patient and say, well, you know what? We've tried those and the patient has an adverse reaction. That's why this particular drug needs to be approved. And they have to go back and forth and get that approval. That's what happens. But that's what happens with Medicare Part C, Medicare Advantage plans. I can't say they're the worst, but to Sherry's point, quality of care, you want the choice to go wherever you want to go. The point that I wanted to share, so now with Medicare, not Medicare supplement, with a Medicare supplement, so you have the freedom to go into with a good drug plan, and under the drug plans, Medicare prescription, Medicare drug plans. There's a maximum out of pocket of $2,000 per year for the prescription plans, which is a big deal. Because to your point, we've had clients that own businesses, and they might have a small group plan available to them, and they might have cancer.
Right.
And some of these drugs could cost
$15,000.
Thank you. And prior to 2015, the member would have to pay 5% of that number.
Right.
Right? 5% of the big number is a big number. And under their small group health plan with United Healthcare, they may have been a $75 copay. Premium was more expensive, as we saw right here, but when you do the math, they may have been better off staying under Oxford or their group health plan as opposed to going on Medicare with the 5% copay that existed prior to January 1st, 2025. But getting to the point, so now, when you take a look at the math, if a group has less than 20 employees, Medicare is going to be primary anyway. They're going to have to enroll in Part B anyway. So irrespective if they're going to be under a group plan, a Medicare supplement, and drug plan, we've just learned, you know what, if you got to pay for Part B anyway, whether the owner or not, better off getting Medicare supplement with a drug plan than being under the group plan. Agreed? Mm-hmm. That's for those groups that are 2 to 19. However, if you're 20 or more, and then you're the executive paying us $600, right? And then you do the math, so you got 600 plus 320 is 900. So let's say it costs $1,100. Now, can we go to the platinum plan? More likely than not, if you're executive, you're probably going to be under a platinum plan.